All right, guys, Jason Jenkins doing an update on global macro. It's the first of the month, last month in the quarter, as far as this quarter goes, trading, and we'll update just global macro. What we did a little bit in the live room this morning, mostly trading NASDAQ from the long side. And yeah, we'll just go from there. Probably go as quick as I can here. So we talked this morning in the coaching session. I talked about the start of the month, the end of the month, the end of the quarter. You always kind of see what's lining up. Obviously, everything's connected as far as markets go, but there are some key areas between currencies, the dollar mainly, this reflation trade, which includes oil, gold, the rates move, and then obviously that feeds into things like the riskier assets, equities, and or like BTC. Let's start with the dollar. So you get the dollar right. Let me say you get a lot of other things right in markets. And you come to the euro, it's pretty much the inverse. Those of you mostly follow the dollar index, it's mostly weighted towards the euro. So you get the euro, just the opposite view. You can look at it like a trade weighted index view of the dollar. You could even put in trading view, a bunch of pairs, do the math, put in the formulas, and you'll get a little bit different chart. But the majors, the big boys, they all look at the euro for the most part. So when we come to the weekly level, nothing's changed. It's been an uptrend since really the summer is when this kind of reflation trade changed, and the dollar has been in a downtrend, bigger picture. So this long-term trend doesn't change really unless you get all the way back below 116. But between 120 and 116, there's 500 pips. I mean, that'll obviously affect a lot of markets. So you need to go to the daily level. We use how we view trends largely has to do with highs and lows, higher highs, higher lows relative to each other. We call that the TMS or technical market structure. But these are areas. So when I look at an uptrend and I see this area, this isn't about a moving average break. We don't trade level specific, moving average specific. This is about having, this is about areas. So think of it as a chain link fence. Think of it as a boxing ring. You can push up against the fence. You can push up against the rope. So we don't want to be shaken out, or it's foolish to get bearish just because you break below, especially a rising moving average. But just because you break below it, it's not a sell signal. But when we take out, these are areas where you're going to get the higher lows. So far, the euro's done exactly that. You poke below it. You're X amount of distance below the 50-day. That exacerbates the move, but then you come right back with no follow through. So this is the key pivot now. If we get below here, then we talk about that 116 area as a potential move. So that's what I care about the euro on the downside. And it's not a change. What's really going to move these markets and shake things up is not going to be a continuation of dollar down. It's going to be dollar strength. So euro needs to break this 119.5 down, euro obviously up dollar. On the upside, nothing really changes. 122 is resistance. We've been up there 3 or 4 times. Cable is all, I mean, you can look at other pairs, sterling, the other majors, just grinding higher, very similar to the Aussie. You haven't even really breaking down below the 8 on the weekly level here. Cable just trucking along. So nothing. There's a topping tail here at the end of a move. Maybe that's, maybe that will matter. Maybe that ends up being toppy or the top in the long term. But until you get some more follow through and break down the intermediate terms, cable's still fine. Dollar yen, same kind of thing. The yen's has acted a little bit different than some of the other majors. But you are trying to get above the band, so keep an eye on that in dollar yen. I didn't really highlight that in this morning's session. Sterling, the pound. So I think that pretty much covers FX. And then the next market, a lot of times oil and crude will, it'll move first if you have a shift in the overall big picture. And if we go from risk on, reflation to deflation, risk off. And so I've talked about a while for almost a decade now, or over a decade. Every time we've gotten there's a long-term trend line here from the highs. You can draw it all the way down. I don't know why it's not showing. And each time we've gotten back towards that trend line, no idea why it's not showing. I'll just draw a quick one. We've had significant long-term lower highs. So again, yeah, if you draw it very specific, we actually are above it. But again, that's an area that I care about longer term. So I'm not, it's foolish to get bullish up here after a move from the COVID lows, or really since this reflation trade again started in the September, October timeframe with the dollar going down. It's just, you don't want to chase the longs up here. So can you play intermediate term or more tactical longs near term? Yes. But the way I've been playing it is setting up on as a long-term core short, more contrarian, and it's a patient sale. It's patient shorting. It's sell a little here, sell a little here. I like to kind of pick the top end of these, the top end of the cycle, the top end of the channels, and you feed a little out, and then if we can crack this low and get some momentum to that downside, then I'll add to it on this side of the cycle. That's the idea when you're trading contrarian. So I covered a third of my short today just because where we came from up above at 63.64, which I sold a little bit into, covered some here today. And again, it's not an aggressive trade yet, but I want to see price like get below the pie line, below the 200, get in the southern hemisphere, stay in the southern hemisphere, get traction below those levels, take out 58.59, and then you could see potentially a bigger correction. That $50-$51 area would be the next spot that really the market would have to hold just to keep this in an uptrend longer term. That's the bands. That's a 10-point drop. We'll see if it plays out. Oil, the dollar, gold is not liking the rates move. So we've been bearish, playing a little bit of a long in silver because it's holding up better, and then short gold. So those pairs trades off each other, and then we covered a lot into the pie line down here last week. So I kind of missed this last drop. But it looks like, again, it depends on what the dollar does. But if you continue to have rates moving higher, real rates, and then you get a dollar strength, that could easily push gold back to 1,500 in this area. I mean, it just trades horrible relative to Bitcoin. So BTC seems like that's the asset that when stocks are up, rates are moving higher, the whole inflation trade, and with down dollar, Bitcoin's done much, much better. So that's new this year. It's kind of been a global macro theme that it does seem to be having a higher correlation now. Silver's fine. I don't think this is a runaway uptrend. I think it's going to continue to be choppy. If you really get into a 4-hour chart, it's sideways. I mean, I didn't sell anything into the 28 area. Otherwise, I'd be covering here today. So I'm at 26. If you were short on the long side, I mean, I didn't even take any off into 28 out of my long. I probably should have. But I'm a buyer 25, 26 if we get back down there. I may put a bid in overnight. Copper, that's another big picture trend to keep an eye on. It's just been an amazing move. I didn't think we'd get above 3, and then 3.5 we did a lot of work at, and then we just plowed through all the way to 4.5. So this, just like the Aussie, we kind of came off pretty hard Wednesday, Thursday, but it's done nothing wrong. I mean, this whole inflationary commodity move has done nothing wrong. You got to get the Aussie back below 76. 80 was kind of an interesting level on the upside. And you can watch that. Maybe that starts to give way, fizzle out. And again, that whole commodity picture, along with this Aussie, needs to start making lower lows before I can really make a bigger play on short anything like energy or add to our oil short. Nat gas, a lot of weather in the news, but really couldn't get above 3. That's just a choppy market. I liked it down in front of 230 level. That seems to be the right spot. Probably continues to be choppy, if not down, because you'd think the weather's getting warmer on the margin. I think that's pretty it for the majors. BTC put out the first over here on the Ethereum futures, our first buy signal. So that'll be fun to kind of issue some trades there. I mean, we've been doing it on the cash market for years and years, so it doesn't change a whole lot. But it'll be interesting to see that chart and that market develop. Bitcoin, I didn't play this last drop over the weekend. If you bought well, then today you got rewarded. You just come out of some in front of this 50,000, 51,000 level. This kind of looks like the euro to me. You held 120, we bounced, couldn't get above 122. So 45 seems to be the support level on the downside. Even if you break that, I'm a buyer at the 200, I'm a buyer at pi. So still core long. I won't have anything to do here at this resistance, but if we make a new high back towards the previous highs, I'll come out of some again that I bought back at 46. I'll do another video on alts, and I think that pretty much does it big picture. Intraday, I just wanted to talk to you guys. I don't think some of you know that there's a tick chart. So you can get inside the 1 minute chart and get to the even smaller micro time frames. Here's the 1 minute chart of the NASDAQ. Played this on the long side today, all day. But some of you, I think, are good at getting the 1 minute and 5 minute cycles down. But there's even a higher next level of higher frequency trading you can do, where you can get inside of these moves. Like there's more wiggles, there's more cycles inside of here that you can get involved in. And like when you're shorting, if you're long here on NASDAQ and then you're maybe shorting S&P, there's more to do here when the market kind of starts to roll over. You could get in here on the tick chart, like if you were short S&P for that move. I did it again here, right in there. I got busier on S&P off the tick chart. So that's what we teach in our coaching sessions, is how to work that size differential and adding to your plays and just getting a feel for working multiple contracts off each other if you choose to do so, or just outright trading one pair. Here's how you get to the tick chart. Change the time frame here. Tick 100 ticks is good. And then notice, like this was kind of through lunch, when some people maybe would have just bought a dip on the 5 minute, and then you'd be sitting around waiting with just trying to take profit on the move to there. But this is what I mean. There's all this flow, and this is what the algos are trading in the higher frequency guys, is the same, all these cycles in here. So there's a lot to do there. And you just trade the cycles the same way. You can use the RSIs also. But this is what I'm doing on the NASDAQ. Buying here, there's 10 points. 15 points. Sometimes there's even 20, 40 points in some of these moves. And then you could do the opposite, sell some S&P when the NASDAQ's here. So if you're buying NASDAQ, you're taking a little off, shorting a little S&P, covering some S&P, buying a NASDAQ back. And you can ping pong these little micro moves all with the same approach, same model. So that's kind of what we're doing today. Core side, bought well NASDAQ. We got rewarded with that today, coming out of a little bit of stuff that we bought last week, whether it was like Apple calls in the options room. Got paid on those today. We signaled that. Friday, we were covering Russell shorts. I put a little bit of that back out. Sold a little bit of S&P short versus my core long. What is this? Oh, this was day trading this morning. That's what's possible when you start banging these contracts out, guys, on the near term. 24, 22 lots by 10 in the morning. Just trading the open. So that's what we do in our live room. That's what we do in the prop room, the coaching, all the mentorship. There's a lot that goes into the coaching. I mean, we get into the longer term stuff. We get into psychology of trading and the mental analysis. But if you're new or you want to get signed up, I'm only going to do coaching through March, not through March, but anybody that's new that hasn't already signed up for coaching mentorship. March is probably going to be the last time to sign up if you're new, because I'm going to take a break probably through the summer and get some other projects going and work with the institutional service to get that up and going. So this week, guys, if you are interested, not only do I have a huge discount on the courses, entire trading package, go to jenkinscm.com, become the memberships, go to the trading package here. All the Forex, Pi cycle features, the entire directional institutional model that we built from the institutional running the rates desk, covering the primaries, the hedge funds, and how we trade the option strategies, which are very unique to what mostly what you'll find out there, which is very vanilla strategy, verticals and covered calls, but nobody really teaches the back ratio spreads or how to trade around it. And there's a lot of good hedging in that course. So all that is value of 5,500. You're also going to have access to the options edge team. So that's where a lot of the swing trades and longer term positioning are, like I was doing on Apple today. So that's about $8,000, guys, in value, and you get all of it. Just the courses, if you want to on demand, learn it on your own and have it, $750. So it's 1/10 the price. What is that, 90% discount? But I'm only going to run it through this first week in March. So you got to sign up by Saturday. And then if you want to do the coaching program includes the courses, or that typically is running $3,000. So I knocked it down to 1,500 for the courses and for my time on the coaching side, 1,500. And if you sign up by Tuesday, so I just did like a 48-hour thing, I'll knock off another 250. So if you come up here to the top, there's just the courses. If you want the coaching sale, all right, that includes the trading plus I took off 250 off the coaching discount. So normally this would be it's $3,000 total. So you're well over 50% off on that, but you save $250 from what we were going to run it through the end of the week and what was running at last week. So, but you got to do that. There's the timer down there, Tuesday at midnight. I don't know if I did it at Central Time or Eastern, but so don't drag your feet on that. See some of you guys in the morning. I just want you to, if you want to do the coaching, you need to do it now, because I got new guys starting. I don't like to go backwards, and you're going to be on different pages instead of kind of all starting at the same time. So hopefully that's fair. That makes sense. And we'll see what this month brings. February was kind of a turning point on some of the cycles. We did start to see vol pick up. So I think March and April, I think it's going to be a lot different than kind of the lower energy January we had. All right, guys, sign up there. Have a great evening, and talk to you guys in the morning.